Hi, welcome back to Joe Blogs. In today's episode, I want to talk to you about the Russian ruble. The generally accepted principle in economics is that the strength of a currency is related to the strength of an economy. If your economy is doing well, then generally speaking, there'll be demand for your currency, and so it should strengthen. However, if your economy is doing badly, then there won't be any demand, and therefore your currency will weaken. And in relation to the Russian ruble, this argument was played out in the early days of the war. Immediately following Russia's invasion of Ukraine, the value of the ruble crashed against the US dollar. However, it then made a remarkable recovery, and at that time a lot of pro-Russian commentators were saying that the strengthening of the ruble showed that Russia's economy was resilient and it wasn't being impacted by the sanctions. However, over the course of the last 12 months, we've seen a significant deterioration in the value of the ruble. And in today's video, I want to investigate what's going on. We'll start off by having a look at the drivers for demand for the Russian ruble, exactly what's happened in terms of the demand for Russian products and therefore the Russian ruble since the invasion of Ukraine. We'll then have a look in detail at the movements in the exchange rate against the US dollar, the euro, the Chinese yuan, and the Indian rupee. Because over the course of the last 18 months, Russia has changed its trading patterns away from dealing with the West and moving towards doing significantly more business with China and India. We'll then have a look at the situation with regards to Russia's reserves, and then finally today I'll wrap up with my summary as to what I think is happening to the value of the Russian ruble, what's likely to happen over the course of the next 3 to 6 months, and what the impact of this will be on the Russian economy. There are a variety of factors that influence the exchange rate between two currencies. However, one of the biggest factors is trade. If a country is exporting lots of products, then generally speaking there will be demand for its currency, and so the value of that currency will rise. And as I'm sure you'll be aware, Russia is a net exporter. It has lots of valuable raw materials that the rest of the world want, such as oil, natural gas and wheat, and historically there was strong demand for Russia's goods. However, as you'll also be aware, as a result of Russia's invasion of Ukraine, a lot of countries that were previously buying Russian products decided that they no longer wanted to continue with that trading relationship, and sanctions were applied against the Russian economy. And the sanctions have therefore had a huge impact on both the demand for Russia's products and the value of the ruble. And the single biggest product that Russia exports is oil. Now, before we go on any further today, I want to talk to you about today's sponsor, Z-Biotics. We've all got busy lives, and although it's great to enjoy a few drinks with friends, none of us can afford to waste a day stuck on the couch because of a few drinks the night before. And if you've been looking for a way to reduce that morning after feeling, Z-Biotics have produced a game-changing product that could be the answer that you've been looking for. Z-Biotics Pre-Alcohol Probiotic is the world's first genetically engineered probiotic. It was invented by PhD scientists to tackle rough mornings after drinking. Here's how it works. When you drink alcohol, alcohol gets converted into a toxic byproduct in the gut. It's this byproduct, not dehydration, that's to blame for your rough next day. Z-Biotics produces an enzyme to break this byproduct down. It's designed to work just like your liver, but in the gut, where you need it most. All you need to do is remember to drink Z-Biotics before drinking alcohol, drink responsibly, and get a good night's sleep to feel your best the next morning. Z-Biotics has received numerous 5-star reviews, and to get 15% of your first order, use the code JOEBLOGS at checkout at zbiotics.com/JoeBlogs or scan the QR code on the screen right now. You can also sign up for a subscription using my code, so you can stay prepared no matter the time or occasion. Z-Biotics is backed with a 100% money-back guarantee, so if you're unsatisfied for any reason, they'll refund your money, no questions asked. This chart plots the value of Russian oil shipments dating back to January 2022. So this is just oil that's transported over the sea, so it doesn't include the pipelines that supply oil directly from Russia to China. And in terms of the colours on this chart, the light blue section, which is the largest on the left-hand side of this chart, represents sales to the European Union. The yellow section represents exports to Egypt. The orange section exports to India. The grey section is a collection of other countries, including shipments to China, which is one of the biggest buyers of Russian oil. The green section at the top are exports to Turkey, and no details have been provided for the dark red section at the top. So if we start off by looking at the overall trend, you can see that there was a large increase in the value of Russia's exports in March 2022, which was driven by the huge increase in oil prices at that time, following Russia's invasion of Ukraine when there was extreme turmoil in the markets. The total value of Russian oil exports then fell in April when a number of countries came out and stated that they would no longer buy any Russian products. However, due to the combination of rising oil prices and the reality of actually dealing with the practicalities of stopping buying Russian oil, the value of Russian oil exports actually started to increase again up until the middle of July. However, between July and October, the total value fell as oil prices started to come down and more countries stopped buying Russian oil. We then saw a spike in the value of Russian oil exports in November, which was just prior to the European Union introducing an outright ban on the 5th of December. A lot of countries decided to take the last chance opportunity to buy cheap Russian oil to stock up. We then saw a dramatic fall in the value of Russia's exports in January as that ban kicked in, and over the course of the last 4 or 5 months, the total value of Russian oil exports has increased again as Russia has managed to find more trading partners. However, if we take a step back and look at the overall trend of this graph, you can see that it is predominantly downwards. If we look back to the situation in March 22, there is a distinct trend downwards in terms of the total value of Russian oil sales. And if we now look at the breakdown by region, you can see that in the first quarter of 2022, by far the biggest customer for Russian oil was the European Union, which represented around 2/3 of all sales. And at that time, countries such as India and Egypt represented a very small percentage of Russia's oil exports. However, if we now look at the situation today, you can see that there are virtually no exports to the European Union, and India and Egypt, and also China, which is represented in the grey section of this chart, have become the biggest buyers of Russian oil. And if we have a quick look at this chart, which plots the value of Russian oil exports for refined products, so this is diesel and gasoline and anything that's been through the refinery process, you can see that it follows a very similar trend to what we've just seen for crude oil. There was an initial spike in the value of Russian refined products in March 2022. However, since that time, there has been a distinct downward trend in the value. And in terms of the breakdown of who Russia is actually selling refined oil products to, you can see that once again in the first quarter of 2022, the European Union was the single largest buyer, equating to around 3/4 of all sales. However, following the European Union ban on refined products that was introduced on the 5th of February, the value of sales to the European Union has dropped dramatically. Now, interestingly, when we look at this chart, there hasn't been a dramatic increase in the volume of purchases from India or China. And the reason for that is that India and China have their own refineries. They can refine crude oil and convert it into diesel and gasoline and whatever's needed for their markets. And so they would rather buy crude oil and put it through their own refinery process because firstly, it's cheaper to buy crude oil. And secondly, having a refinery business in your own country generates employment and profit for your country. So China and India simply don't have the same appetite for refined products that they have for crude oil. And this represents a variety of problems for Russia because refined products are higher margin, so they're making more profit on them, so they're more valuable. That's what they actually want to be selling rather than the crude oil. And also the refinery business in Russia is a huge industry. Russia has around 30 mega refineries, which employ lots of people and generate revenue for the Russian economy. So the loss of refined oil sales is actually hurting Russia more than the drop in crude oil sales. And this chart plots the price of Russian crude oil dating back to January 2022. And the reason that this is important is that the demand for Russian ruble is a combination of the volume of oil, but also the price of oil. And what you can see from this chart is that over the course of the last 18 months, the price of Russian oil has fallen. There is a significant downward trend in this chart. In the first quarter of 2022, the price of Russian oil rose from around $75 per barrel to around $120. However, today the price of a barrel of Russian oil is trading for less than $60. And the reason for that price fall is twofold. Firstly, there has been a general fall in oil prices over the course of the last 12 months as the global economy has slowed down and therefore demand for oil has fallen. But secondly, the price of Russian oil is also trading at a discount to the general market price of crude oil as a result of the sanctions that have been applied against Russia, limiting the markets that it can sell into. So in terms of the overall summary here, the demand for Russian oil has fallen as a result of the sanctions, and the price of Russian oil has also fallen. So the combination of those two factors means that there's been a fall in demand for the Russian ruble. This chart plots the exchange rate between the US dollar and the Russian ruble over the course of the last 12 months. And what this chart shows is that the value of the Russian ruble has fallen significantly over the last 12 months. Now, when you look at this graph, you may be thinking, well, the chart's actually going upwards, so how does that represent a deterioration in value? And the reason for that is that when we talk about exchange rates, we generally talk about the strongest currency first. So on this graph, we're comparing the value of the US dollar against the Russian ruble because the US dollar is worth more. So $1 is currently worth around 83 Russian rubles. So although this graph is showing an upward trend, what that means is that the value of the US dollar is increasing and the value of the Russian ruble is falling. This time last year, $1 was trading for 55 Russian rubles, which represents a fall in value over the last 12 months of more than 50%. 6 months ago, $1 was trading for 62 Russian rubles, so that represents a 33% fall in the last 6 months. And 3 months ago, $1 was trading for 75 Russian rubles. So that represents a 10% fall in the last 3 months. So what we're seeing here is a consistent trend in the fall in the value of the ruble. And the main reason for that is the fall in demand for Russian products. Now, comparing the Russian ruble to the US dollar is important because historically the vast majority of contracts for oil and natural gas have been agreed in US dollars. They haven't been agreed in Russian ruble. So that means that historically when countries like China and India were agreeing deals to buy Russian oil, they were agreeing the price in US dollars. They weren't agreeing it in Russian rubles or Chinese Yuan or Indian Rupee. And as I mentioned at the start of the video, historically, when there was strong demand for your products, your currency should be increasing in value. However, what we're seeing from this chart is that the value of the Russian ruble is falling. Now, you may be sitting there thinking, yes, but things have changed now. Russia no longer wants to deal in US dollars. It's now trying to persuade its trading counterparts to do deals in rubles. And I think it'll be interesting to have a look at what's happening to the exchange rate between the Russian ruble, the Chinese Yuan, and the Indian Rupee. This chart plots the movement in the exchange rate between the euro, which is used by most of the countries of the European Union, against the Russian ruble over the course of the last 12 months. And as you can see, once again, this shows that the value of the ruble has fallen significantly, and the trend of this graph is virtually identical to what we just saw for the US dollar. This time last year, €1 is trading for around 56 rubles. So the current exchange rate of around 87 rubles represents a 55% fall in value over that period. 6 months ago, €1 was trading for 64 rubles, so that represents a 40% fall in the last 6 months. And 3 months ago, €1 was trading for 79 rubles, so that represents an additional 10% fall. So the overall summary here is that there's been a consistent and marked fall in the value of the ruble against the euro. Now, over the last 12 months, Russia has increased the value of its trading relations with China significantly. And this chart plots the movement of the Chinese Yuan against the Russian ruble in the last 12 months. And as you can see, the trend here is identical to what we just saw for the US dollar and the euro. 12 months ago, one Chinese Yuan was trading for around 8 Russian rubles. Today, the exchange rate is more than 11.5 rubles. So that represents a fall over the last 12 months of 45% in the value of the ruble. 6 months ago, one Chinese Yuan was trading for 8.8 rubles, so that represents a 32% fall in the last 6 months. And 3 months ago, one Yuan was trading for 10.8 rubles, representing a fall of around 8% in the last 3 months. And I think the fall in the value of the ruble against the Chinese Yuan is really interesting. As we discussed earlier in the video, the dollar is the recognised benchmark for trade in things like oil and natural gas and food products. But President Putin was trying to dislodge the dollar and replace it with the ruble. He wanted trading counterparts to agree their contracts in rubles. But what's happened in China is that the Chinese authorities haven't agreed to do deals in rubles. They're doing their contracts in Chinese Yuan. So they're no longer benchmarking against the US dollar, they're benchmarking against their own currency. And what that means from Russia's perspective is that China is paying for those contracts in Chinese Yuan. Now, the reason that Russia is happy to agree to that is that they're building up large amounts of Chinese Yuan, which they're then using to pay for all of the imports from China. So the trading relations are increasing on both sides. Russia is exporting more oil products to China, and Russia is also importing more products from the country. And so it can use those Chinese yuan payments to offset all of those imports. But the problem that generates from Russia's perspective is that it doesn't increase the demand for Russian rubles. And as you can see from this chart, the value of the Chinese yuan has increased relatively against the Russian ruble because demand for yuan is increasing because of these contracts. This chart shows the exchange rate between the Indian rupee and the Russian ruble over the last 12 months. Now, interestingly here, I mentioned earlier that generally speaking, when you're looking at exchange rates, you talk about the strongest currency first. And 12 months ago, the Russian ruble was stronger than the Indian rupee, as the exchange rate at that time was 1 Indian rupee to 0.7 rubles. However, as you can see from this chart, that situation has recently reversed, and 1 Indian rupee is now trading for 1.0034 Russian rubles. So it's pretty close to 1-to-1. But the important point here is that over the course of the last 12 months, the value of the rupee has strengthened significantly against the Russian ruble. And the fall in the value of the ruble over that time is around 43%. 6 months ago, 1 Indian rupee was trading for 0.75 Russian rubles, so that represents a 33% fall in the value of the ruble over the last 6 months. And 3 months ago, 1 Indian rupee was trading for 0.9 Russian rubles, which represents a fall of around 8% in the last 3 months. And once again here, I think what's happened in terms of the value of the Indian rupee is really interesting, because Russia wanted to do all of its trade with India in Russian rubles. However, the Indian authorities have pushed back on that and wanted to do their trade in Indian rupees in exactly the same way as the Chinese wanted to do their business in Chinese yuan. And so what we've seen over the last 12 months is there has been a lot more trade between the two countries, but there hasn't been a significant increase in the demand for Russian rubles because India have been paying in Indian rupees. And the problem that that's caused for Russia is twofold. Firstly, it hasn't improved the value of the ruble because the increase in demand for ruble hasn't been there. But secondly, one of the problems for Russia is that it's now building up a large amount of Indian rupees. And Indian rupees are only really accepted in India. Not many other countries around the world want to take payments in Indian rupees, and Russia simply isn't doing enough import business with India to be able to use all of those rupees. So this is causing the Russian authorities a problem because they're now building up large amounts of the currency and they don't really have a lot to do with it. The success of the Russian economy and the value of the Russian reserves are really important and have a direct relationship to what's happening with the Russian ruble. Immediately following the invasion of Ukraine, the Russian authorities took the decision that they wanted to support the value of the ruble in the international markets, and therefore they were happy to use some of their reserves to go in and buy rubles to keep the value strong. However, in the summer of 2022, the Russian central bank decided that it no longer wanted to pursue that strategy, and as a result of falling demand for oil and gas products, we saw a fall in the value of the ruble. Now, one of the reasons that Russia is currently struggling to support the value of the ruble is that the Russian economy is doing very badly. Now, as we've discussed in other videos, Russia does have significant reserves. Prior to the invasion of Ukraine, Russia was holding around $150 billion in its national wealth fund. However, in 2022, the Russian economy recorded a deficit of $48 billion, and now in the first quarter of 2023, they've recorded an additional deficit of around $30 billion. So those two deficits combined equate to around $80 billion, which is more than half of the national wealth fund at the start of the war. So Russia is seriously depleting its reserves right now. And that's one of the reasons that the central bank no longer wants to support the Russian ruble in the international markets, because it's trying to reserve all of its cash to fund the losses that the economy is making. So the last thing that it wants to do is waste further money supporting the ruble when it doesn't really have the capacity to do that. And if Russia continues to experience deficits at the same rate that it's experienced over the course of the last 12 months, it's likely that by the end of 2023, the Russian economy will have run out of cash. Now, as you'll be aware, Russia does have around $300 billion worth of assets overseas, but those assets have been frozen. At the start of the war, those assets that were held in countries such as the USA, the UK and France were all frozen, and Russia does not have any access to those assets. So the losses that the Russian economy is experiencing right now are starting to cause them major problems. And that is one of the reasons why we've seen a significant deterioration in the value of the Russian ruble. So what's the summary and conclusion today? Well, I wanted to post this video because, as mentioned at the start of the video, the commonly accepted principle is that if your currency is doing well, your economy is doing well, and vice versa. And what we've seen from today's analysis is that the Russian ruble is not doing well. The exchange rate of the Russian ruble has fallen against the US dollar, the euro, the Chinese yuan, and the Indian rupee. The main reasons why the value of the Russian ruble have fallen is that there's been a fall in demand for Russian products. As you'll be aware, the sanctions that have been applied against Russia by the West means that it's lost a lot of its historic trading partners. Europe was the single largest buyer of Russian natural gas and Russian oil products. And the vast majority of countries in Europe have now stopped making all of those purchases. So that's obviously had a detrimental impact on the demand for Russia's products. But as you'll be aware, Russia has been doing its best to find new markets, and its biggest two trading partners today are China and India. So to a certain extent, it's been able to pivot and find new markets. But unfortunately, from Russia's perspective, what they haven't been able to do is persuade those buyers to accept contracts in Russian rubles. And that's had a direct negative impact on the Russian ruble. So I guess the big question here is, does it really matter? Is the value of your currency actually important? Well, one of the reasons that it is important is that it affects the cost of your imports. If Russia is importing goods that are priced in US dollars, or euros, or Chinese yuan, or Indian rupees, then the net cost of those imports is rising. As we've seen from today's figures, the value of the ruble has fallen by around 50% in the last 12 months. So that means that if Russia is importing something that costs $1, this time last year, that product would cost Russian consumers 55 rubles. Today, that same product will cost Russian consumers 83 rubles. So that obviously represents a huge increase, and therefore the cost of living should be rising in Russia. So generally speaking, what we see when there's a significant fall in value of a currency, there tends to be high levels of inflation in that country. And if you follow the channel, you'll know that we've talked about lots of different countries all around the world that have extremely high rates of inflation right now, and their currencies are in the toilet. However, if we have a look at what's happening officially with Russia's inflation, you can see that over the last few months, the official rate of inflation in Russia is running at less than 4%. And the most recent figures published for May show that the current rate of inflation is 2.5%, which is incredible. And if we compare the current rate of inflation in Russia to the rest of the G20, which is the largest 20 economies in the world, you can see that the only countries with a lower rate of inflation than Russia are Switzerland and China. And China is actually going through deflation at the moment. Its prices are falling. And the 2.5% is materially better than 8.7% in the United Kingdom, 7% in Australia, 6.1% for the whole of the Eurozone, 4.9% for the USA, and 4.4% for Canada. Now, as we've discussed before, there is a limited amount of data being released by the Russian authorities, so we don't have a full set of figures. We're only seeing the inflation numbers. But when you compare inflation to what's happening to the Russian ruble, it doesn't really stack up. The two things don't go together. As I've just mentioned, when the value of your currency falls, the cost of your imports rise. And as the ruble has fallen by around 50% in value over the last 12 months, you would have expected Russia to have one of the highest rates of inflation out of anybody on this list. So these latest inflation figures do seem a little bit unbelievable. So the overall summary of today's video is that the value of the Russian ruble has fallen dramatically over the course of the last 12 months and is continuing to fall. This is an ongoing trend. We are seeing month-on-month declines in the ruble. And as we've discussed in today's video, that is partly due to the fact that there is a fall in demand for Russia's products. There are less countries that want to buy Russian goods. And also a lot of countries that are doing trade with Russia are saying that if they're not going to do a deal based in US dollars, they want to do it in their own currency. And as a result of that, the demand for Russian rubles is not increasing. And as we discussed right at the start of this video, the generally accepted economic principle is that if your currency is doing well, your economy is doing well. If your currency is doing badly, your economy generally is doing badly. And over the course of the last 12 months, Russia's currency is one of the worst performing in the world, which indicates that the Russian economy is not doing well. So hopefully you've enjoyed today's video, you found it useful, informative and thought-provoking. If you've liked what I've said, then please give me a thumbs up. Thank you for watching this video all the way through to the end, and here's something to put a smile on your face.